CommitToWealth.com. Creating a legacy by committing to real estate wealth.
Commit to Wealth Nation, welcome to the Commit to Wealth podcast. I'm your host, Juan Vargas. On today's show, we have Lewis Houston. Lewis is an experienced multifamily investor with over 10 years in the business. He has invested in over 4,000 doors, over 15 properties throughout the states of Texas, Florida, and Oklahoma. He received his MBA from Northwestern University. Lewis, welcome to the show.
Hey, thanks, Juan. I appreciate you having me on, man. Thanks a lot.
Hey, no, it's a pleasure to have you on. We've known each other for a few years now. It seems like a couple of years now that we have known each other, and so I've been wanting to get you on. Been wanting to ask you to hop on because you have a lot of experience that I think that is very valuable to anybody out there listening, right? So anybody out there that's especially as a passive investor, a lot of experience, so this guy is really going to bring us a lot of value. So I'm really excited to have you on. So, tell us, let's start off with your background. Who are you? Who is Lewis Houston?
Lewis Houston is a guy who originally came from New York City. I've been here since I went to school at the University of Houston. Once I graduated, I worked a few jobs, but I then worked for the Houston Rockets, and I worked for the Houston Rockets to win the championship. So,
nice.
Director of game presentation. So anytime the ball wasn't bouncing, I was kind of giving people what's going on, putting on a show for 18,000 people back when it was called the Summit. So I love my Rocket days, and those were 2 great years that the Houston Rockets won the championship.
Yes. Mm-hmm.
And it was a blast. But I did that, and then I went and worked in the corporate space. I worked for Shell Oil. I thought I was only going to be there for about 3 to 5 years. Ended up being 20. Lewis lived overseas. I enjoy lots of different things. I have a gymnastics background. Where I taught gymnastics. I judge competitions globally. I have lots of different interests, but one of my key interests is my real estate space. And that's given me the ability to say, okay, I can retire and now enjoy life and keep moving forward in the real estate space. So, but Lewis is a guy that loves space. I got horses, right outside the back. I got donkeys out there running around. I got my own garden that I was working on yesterday. Even though I'm retired, I'm busy.
Busy is good. Yeah. And I do like the fact that, you have been able to kind of create your own lifestyle, right? And you have horses and donkeys or whatever it is that you have, because that's a choice. It's a choice that you've made that you want, either that or your wife, one of the two.
There you go. You got it right. If you heard the City Slicker, I'm Billy Crystal. She loves the space, and animals rank higher than me. So, and I don't mind. Mama's happy.
Yeah. Happy wife, happy life. We've heard that many times before, and I mean, it seems like it's true. So that's awesome, Lewis. So let's talk about your multifamily experience. You really do have a really good background in many different areas, and so I really do appreciate you sharing that background. So let's get the show started. Let's talk about your multifamily experience. And how did you get started in real estate in the first place?
So, like most people, I started reading. When I reached mid-level manager status in a company, I started to think, okay, I need to figure out what's going to be my after work life. And this was back in probably 2000. I was starting to think about this. And I actually started reading a lot of books, and real estate really was something that really was that I got attracted to. So the big thing I did was I read books on it. And that was my first thing. So, of course, you read Rich Dad, Poor Dad, which blew my mind. Then I read The Cash Flow Quadrant, which then shocked me. And I was like, okay, multiple streams of income. I went through this period of 5 or 6 books, like most of us do, reading books and thinking of different ways to make passive income. Then I realized Lewis doesn't have fixing skills. So single family isn't going to be the area that I'm going to focus on, because I didn't want to deal with people calling me in the middle of the night or having to find tenants, etc. So I then focused on multifamily real estate, and I thought I got to have something that's probably going to be about 80 units or more, so that there's a property management group.
Mm-hmm.
Once I got that, and that is what I call, that's my focus. That's where I'm going from my first deal. My first deal I ever did was for 3 apartment complexes totaling about 700 units that I got into a deal on.
Oh, wow.
First deal. I was one of the investors. And even till this day, and that was back in 2010, until this day, we still own the property. We've received all of our money back, and we still get quarterly distributions every quarter on the quarter.
Nice.
What it's been going on. And we've owned it for nine years, and so, I mean, the performance on that property has been very, very strong. I remember when I first did it, but I was like, that's a lot of money you're going to invest. And I was like, it's going to pay off in the future. I promise. Just go with it. And from that point, I did one deal a year for about 3 or 4 years, 1 or 2 deals, and just to get some consistency, and just because you don't have that much capital, so and these were not, and I didn't do retirement funds at that time. It was just straight up capital. So I was doing those capital, using those distributions I was receiving, reinvesting them. Till this day that I have 15 apartment complex deals with over 4,000 units. And I'm now getting 15 checks a quarter, which is really nice. And that helps me keep the lifestyle that I want to live, and keep growing and learning in this real estate space as well.
Wow. Yes, I like that. I mean, that's definitely a good start, a really strong start. First of all, what made you, I guess, have the confidence in going to, to a deal like that, where it was like, 3 different properties, you said 700 units. Is that correct?
100 units. I mean, and it was with a group. I went to every group in Houston that was dealing with multifamily real estate. Every group at that time, back in 2010. And remember, that was when that was coming with the crash. So people were kind of escaping. Things were crumbling at that time, back in 2008, 2009. And that's when I was doing all my research to kind of look at all these different entities to see, who's the real deal versus, okay, they look a little suspect. And I went to as many meetings as I could, all the get rich quick, seminars that they have on those Saturday mornings from 8 to 10, get you to go. And then they want you to sign up. I did all of them, didn't sign up, listened to all the stories, but then made the decision, that's not for me. And it wasn't until I went to one group that I kind of went to and just sat and listened and was like, okay, how long have they been around? They've been around a long time. I was like, okay. And that's how I first got introduced into the multifamily real estate. And I remember when I joined the group, it was really interesting because I was like, okay, I need to know who the best leads. And they were like, legally, we can't tell you that. And so I sat down and I was like, well, how am I going to learn who are the best leads? Because I know I can't do these things on my own. So then what I did was I looked at who were getting awards. And so I walked around the office and looked at who were the top leads for multifamilies and wrote down all their names. I wrote them down. And then I went and sent emails to each of those individual leads saying, I'm seeking to invest in a passive investment. If you have a deal, please let me know. I sent about 20 emails out, got back about 10 replies and started a discussion. And then from there, it just popped. But I did the research. I did the networking. I talked to people because I was nervous. I mean, you're going to invest 50, 75, 100 grand, even 25 grand. That's a lot of money to people. So I was to do the research. And then I was like, okay, Louis, what's your risk tolerance? Because that's really what this is about. Your personal risk tolerance. My risk tolerance might be different than yours, different than, I know it's different than, other people, that are out there. Because some people get to where they talk, strategy, but they never act. They never trigger. And it's because of fear. And I get it. They get some money, that's their savings, and they don't want to risk that. And I get that. But if you want to build passive income, you build 6 months of your monthly income, you put that away. Everything you build after that, you got to make that money work for you, because the banks aren't giving you 5% anymore. They aren't giving you 7. They're giving you less, sometimes less than 1.
In some cases, I've had discussions with different people. In some cases, banks in China or Asia, wherever, have even negative interest rates where they're charging you to keep your money. So that's why a lot of those guys. This is another totally different subject, but that's why a lot of those guys are even moving their capital into the U.S. Where there is some opportunity, like in real estate, for example. But no, that is incredible, Louis. How you have been able to grow over time. And just to have, to know that this is your first deal and you're doing 700 units with somebody you did your research on, but still your first deal. And people are afraid of that very first step, and you took that very first step, and it launched you into the position that you're in now.
It did. It was the catalyst. But it was funny because I remember going to when my lead and I talked, because I went to meet with him face to face. I wasn't going to do this over the phone. I'm not investing over the phone. I'm not investing. I want to look in this individual's eyes to see, do I have a good vibe with this individual? And so I went and met with him and talked to him, and he was explaining to me how it was going to work. And I was like, this is my first investment. He was like, I understand. And then finally I got to the point, and this is one of my pet peeves. I got to the point where I was like, as a lead, how much money do you have in this deal? And that's one of my key questions, because if a lead doesn't have money into a deal, I won't invest. I don't care how good the deal is. If that individual doesn't have money into the deal, it's a no. And when he told me he had $650,000 in the deal, I was like, how much you need? Because I was like, he's gonna lose,
Yeah.
He's gonna really want to make sure he
performs. Yeah.
And he wants to perform. So I invested, and that month it's more than doubled, and we're still getting profits from it. And keep in mind, when it sells, there's another distribution that comes out when it pops, right? Because we've been sitting on the property for 10 years, right? And so it's a beautiful thing, and you wait for those, but as long as those distributions are coming, I'm all good. But he or she has to invest in the deal before I do.
So you mentioned that you've been involved in, throughout different states, Texas, Florida, Oklahoma. Where was this first deal? And then how did you grow from there? Like, where'd you expand into? What states did you expand into?
So my first deal, it was in Houston, and it was for 3 properties. And from that point, after that, I looked for another deal. I did another one in the League City area. And then once I started doing, I did a third deal, and that was with properties in the Houston area. And after that, then I started to spread out and look into different markets, because what I didn't want to do was become so isolated into one region, because if that region falters, then I have no diversification, and I can't take advantage of areas that are doing stronger.
Yes.
Then I started to look in different markets. You look into Florida, you look in the Oklahoma, and Oklahoma is a little bit tricky because at the time, places like Oklahoma and San Antonio have bases with them, and so that's what was generating a lot of income for a lot of people in apartment complexes was the base. But if the base moves, then you're a bit lost. So you have to be aware of little things, what industries in what regions, and what companies are in what areas, and where there's growth. So another thing I do is read where a lot of companies are moving their headquarters, because when companies move headquarters, those are opportunities. And if it's in an area where it's landlord friendly, I might look in that area as a potential passive investor, and look for deals in that area from leads that are doing deals in that area. But I started to expand my network, getting to know different people, getting to know people like you, always networking to learn who's doing what, because there's always people out there. You just have to be secure and understand how to talk to people and how to interview potential leads to make sure they have your best interests at heart, because that's key.
That is key. You're responsible for a bunch of capital that belongs to other people, and that is a huge responsibility. As a sponsor, as a deal sponsor, syndicator, whatever you want to call it, you are responsible for somebody else's hard-earned money. So better believe you better do the right thing, as far as that's concerned. You read about it, it was something that excited you. It was something that just, you read the books and it was like a wake-up call. Why did you continue to choose to be a passive investor?
Interesting story. As a Shell executive, one of my jobs in Shell, and I worked globally for Shell. I lived overseas in the Netherlands for about 6-7 years. One of my jobs for Shell was really to move jobs from one region to another. So I was basically the person they sent to say, if we can get work done in Malaysia, I had to move jobs from the US and from Europe to Malaysia and India and different countries. And I was looking at the impacts of outsourcing, the impacts of layoffs, and the impacts of all of those things. Now, one of the things I made sure to do was, for my staff, I made sure to take care of them and made sure that when the staff got outsourced, I made sure that the company that they were going to gave them a 2-year commitment, right? That they had 2 years. And I told the staff, you got 2 years. After that, it's up to you. But at least they had that time. And I realized it was only a matter of time before the company's going to come and tap, me on the shoulder at one point and say, okay, Louis, thank you, but it's time for you to go, right? Yeah. And so that was what was in my mind. And that was my driver to say, I need to have something else going on. Plus, my nature, I'm an entrepreneurial mindset. I love working with entrepreneurs. I'm a mentor for the ATI, which is the Austin Technology Incubator Program. So I'm a mentor with college startups. And so I work with a lot of college startups, and I'm talking to them about how to do stuff. So I've always had this mindset of, you got to be able to generate, revenue, cash outside your normal revenue stream. And that's something that I learned in a book called Multiple Streams of Income I read, that really talked about, you got to have different sources of income coming in. So you heard me earlier say, I judge competitions on the weekends. I fly somewhere and judge a competition and so forth. That's a revenue generating opportunity. I go to speak at some of these gyms and facilities, and I coach some of these kids that are doing gymnastics or cheerleading competitions that you see on ESPN. I'm one of those guys that coach. I've always looked at different ways to have multiple streams of income. And even some of my peers at Shell recognized that. And they were like, man, you always got something going on. And I'm like, always. I said, because I never wanted to be married or locked in by Shell. And not to say Shell would do that, because they're a great company and they treat their employees fantastically. But I really wanted to make sure I had something else, and that was my driver. And so that's what pushed me, and I stayed with it. And now that I've retired from Shell, all my peers, my Shell colleagues are like, how did you do it? And now I'm inviting them into this real estate space to say, it is possible. This is what I've been doing for the past, 10 years. And now it's time for you guys. And they're like, let us go, because we need to retire. And I'm like, this is one way to get you there. So
gotcha.
That's my driver. And now I'm trying to help others get there. And that's my key. Now that I've done it, I want to help others do it.
I love that. And it's about, maybe people are not ready for at a certain time, right? So maybe whenever you got started, your peers were not ready, or they just did not feel confident enough to take that action, right? But I think a lot of people out there, they have to see somebody else have success and know that it's true and that it is real and that it's achievable for them to want to take action themselves. I think it's just natural for us to kind of do that, right? And so now they're kind of circling back and they're reaching out to you and they're like, hey man, we want a piece of this too, And that's the way it is, that's the way it is. But that's incredible. I love that you're able to now share your success stories and, kind of guide them, be their coach, their mentor, so to speak, and kind of, guide them in that right direction. So I love that. So Louis, going back to multifamily, what is it that you're looking for like today as far as or even back on those deals that you did, what was it that was a key ingredient that you had to have whenever you're like vetting deals and vetting sponsors? So I know it's a kind of broad question, but I guess let's focus on the sponsor first, and then we'll focus on the deal second.
So from the sponsor perspective, I need to know that they can communicate. They have to be able to manage my expectations. That means tell me good news, bad news, and all the different news, and do it in a way that's short and sweet, through executive summaries, et cetera. So I'm going to ask them, how are they doing on their communication? Because the last thing you want is to be in a deal where a lead doesn't communicate with you about what's going on when you've given them 25, 50, or even $100,000. You also want to make sure that they have skin in the game.
Mm-hmm.
You also want to make sure that they recognize that they are holding other people's money and that there's a certain amount of respect that comes with that. I also want to look at their past performance. So I want them to tell me about where they've succeeded. I also ask them questions about, give me a time that you failed. How many deals are you putting letters of interest in, so that, and how many are you winning and how many are you not winning? And, what are you learning from that? But one of my biggest things that I look at from a lead is I ask them what makes them decide to refinance or exit. And I wait for them to answer. I don't give them any hint. And I look at I listen to what they say. If they say something like, well, I just want to, first thing I'm going to do is refi. Or, oh no, after 3 years, we're going to exit. If they give me a straight answer like that, I'm typically like, nope, not the one. And the reason why is because the market should push you one way or the other. And if they're not letting me know that they have some economic knowledge, some economic knowledge about, what the market tells them to do, because the market might be a great market to, refi in a certain area, but it might be a great area to exit, like in DFW over the past 2 years. It's been a great market to buy in 1 year, and then in 18 months to 2 years, you could sell and double your money. Where that's not the case in, Beaumont, Texas, or, something like that. It's a buy and hold strategy. If they don't show me that they have the knowledge to be able to balance that, I typically won't invest with them. And if I get and I listen to my gut, if my gut tells me they're talking noise, or they're just trying to say the right words, I can read it. It's something about me being around people so much, I can read through that fakeness. And then I just move on to the next person. And that's how I've done it. And I've been pretty successful. Out of the 15 deals, probably, one, I've had to chase a lead to go, you are not communicating. And I need you to start communicating more. I don't care what you do with the other investors. You need to communicate with me.
Mm-hmm.
Because I need to know. And now they're doing better in their communication, but I had to chase them, after the first year.
I like that, man. Y'all was very detailed, and it gives people a good, a good base into to kind of follow in your footsteps in the same direction, right? So if you're a passive out there listening, take what he said and actually, actually use it. Do your investigation, do your research, know about the sponsor, know about the market. You have to have some economic knowledge as well yourself. You can't expect just the sponsor to know it, to give you the right answers. You got to have your own homework and do your homework at that. But I do like the fact that you said that you want the communications, and you want those communications monthly, quarterly. How is it that you prefer it?
I think it's best when it's monthly, because then that tells me the lead is on point and doing what they're supposed to do. If a lead is getting paid to manage a property, I don't think it's appropriate to do quarterly, because that's 3 months of data. And if something happens in month 1 and you don't communicate to your investors till month 3, there could have been some things that you could have done in the interim. So I think monthly is appropriate. I even ask for monthly communications, or at least access to the monthly data from the property managers. And I think the communication style, short and sweet is perfect. Do an executive summary and then give me a link to all the detail. Everybody doesn't read the same. Everybody doesn't take data in the same, but everybody can read a summary and then decide, I need more data. So and in that summary, you should have what's working well. If anything happened that's negative, you should provide that. And any big anomalies, you should provide that information as a lead, because what you want to give that passive investor is a pulse of how things are going, right? And I'll be honest with you, when you're in 15 or more deals, that's a lot of reports to be trying to rifle through. So just to be transparent, once I get all my money back, I pretty much stop reading the reports because I'm good, right? Because it's already, I've got my capital back. Because as a passive investor, one of the most important things I want is my capital back as quickly as possible. Once I get that, I'm taking that capital and I'm gonna go do another deal. Whether you exit or refi, I'm gonna take that capital back and go do another deal. But my most important element is, how quickly are you planning to get me my capital back? At least 70%, because if I can get 70% back, I can do another deal with that, right?
Gotcha.
That's the key, right? Gotcha. And I want to hear the data that's going to help me, give me confidence, because if I get confidence in you, guess what? I'm probably going to reinvest with you.
Yeah, I'm gonna do very good points. Very good points. I love that. Thank you so much for sharing that, man. That's really good stuff for people to know out there. So the other thing that we, I guess, in this point of the market cycle, we tend to talk about that a lot, right? Because we are towards the top of the market cycle. The market has matured. So what are you looking for these days that has changed? How has your investment strategy changed, and from, say 5-6 years ago to where it is today?
Yeah, good question. The big thing is diversification for me. My strategy was basically to just get into apartment complexes. That was one of my first things. Now that I've matured, I started to say, okay, now I want to get into certain markets. So even now, I'm looking to, get into the Phoenix or Arizona market, because I think that's a very strong market. So I'm looking at deals in Phoenix from leads. I'm also looking in the Florida market. That's going to always be a strong market. I'm looking at that. Houston is a strong market. So I'm looking at that as well. But the thing that's making, when I'm looking at deals, the biggest thing I'm looking at are what's the cash on cash return? So what's that annual amount that I'm going to get back from you? And that's going to be anywhere from 7 to 10%, or, I'm looking for something in that range, 7 to 10%. And then the overall return, I'm looking for something that's going to be, 60% or above in this market. And that's different than, let's say 3 to 5 years ago when that total return was, going to be 120%. The market has kind of contracted a bit to where now it's like 60 and up is going to be kind of good. Now, if I see 60, I might wait for a deal when I see 70 or 80. But I'm looking for, good returns on the money. And another focus for me, 100 units or more. Why am I looking at 100 units or more? Well, that's just more doors. That's what I look for. So right now I'm in only one deal that's less than 100, and it has 98. But that's been my strategy. But let me throw caution to even that strategy, because I have to do this to myself. A good deal is a good deal. You have to be able to look at the financial numbers, understand the financial numbers, because you might find a sweetheart of a deal between 70 and 100 and not know it. So I don't want to exclude any investments. I look at even deals that are 70 to 80, and I just look, how confident am I that lead is going to be able to deliver those financials 3 to 5 years out? That's the question that I'm asking myself every time before I get into a deal. How confident am I? And if you don't know any property manager people as a passive investor, my advice is to get to know a few. And why do I say get to know a few property managers? Because the property managers are the people who are actually running the apartment complex on behalf of the lead. If you get to know the property managers, they know what the rents are. They know what rents go from where. And so I talk to a lot of property manager people just to get their feeling. What's going on in the industry? What are they seeing? What are some of the rents that they're seeing? And I can listen to them and build my own trend line. Because remember, that's data for me. Then I can then assess, this lead thinks he's going to get $1,100 on a 1-bedroom, 1-bathroom in that area? No way. I'm not going to do that deal because that financial won't prove to be, I don't think that financial will prove based on the data I have. Sometimes I have bad data. It happens, but I'm always fueling myself. I'm always fueling myself with that data. But that's how I get to make some decisions, is making sure my network is quite large so that when I need data from information that I don't know, I know people to call to get.
Sounds good. So are you also looking at the financials, like the actual, the T12, the rent roll? Do you do that as well whenever you're vetting a deal and vetting a possible investment opportunity?
I do. I look over the financials because in reality, the financials is the deal breaker for me. And if the financials look strong and the market is growing and there's new companies coming and new investments come in, why wouldn't you get in? And there's certain investments. I was the first investor to jump in the deal because I was like, yes, I know about that. And then there's others that I have to sit back and kind of, ponder and think, do I want to risk, some money going into that deal? But overall, the risks that I've taken have proved to be very positive. Even deals that I didn't think were going to do well popped. You never know. And you just take those. You take those and you go, yes. And then you follow your strategy, follow your mindset, but stay calm, stay consistent, and continue investing. Because if you continue it, the wealth will grow. Just don't take it and start spending. You got to take it and have a strategy. You might need some to spend on a little bit, spend it, but you really want to take those additional income and passive income that comes in and reinvest it, because you're going to then keep building your portfolio.
Doesn't that sound good? I wish that, a lot of people could experience that, because it really is an awesome feeling to have different distributions coming in, and, you can use it as you want, really. That's what it comes down to. You can use it to spend it on your family, to go on vacations, to reinvest it. It just, you have put yourself in that position, and there's a lot of people out there that they're in the similar position, financially, in their corporate job, but they're still stuck to their corporate job, and you just got to be willing to take those, little bit of risk, and get yourself educated and invest. Start investing in some deals, and find those returns. Is really a true thing.
Passively, and that's
passively.
Because, most leads probably won't work, because they're focused on the apartment complex. That's their job.
Mm-hmm.
But as a passive investor, you're probably working. I was when I started. So I didn't have time to, go out and look at all the properties. That's what I want the lead to do. But as a passive investor, it's important for you to know what that role does so that you can evaluate whether a person's doing it right. Another hint I would say is, don't invest just because your friends are investing. I call it coattail investing. You don't need to do that. Learn.
Yeah.
Build your own education. Even the people that I'm helping today get into this space, they'll call me, do you think this is a good deal? And I'll be like, well, do you think it's a good deal?
That's what matters.
Whether I like it or not doesn't matter. Do you think it's a good deal? And
right.
what's driving you to think it's a good deal? Because what I'm trying to educate them about is they're learning about their drivers. They're learning about what their risk level is about. And then they're learning how to make solid investments for themselves in the future. And I love helping people do that. So That's why I do meetups. That's why I do, I talk to people when I meet them at, events that we go to, that you and I go to. I love it. Like when I met you, that was great. When I met you and your wife, that was a great conversation we had for about 45 minutes to an hour. We just talked for a lot about, hey, this is how you get into this space. This is what you do, and this is where you go. And I remember we were like, we live 15 miles away from each other. We never seen each other.
Yeah, because you're right there in Katy, and so it's right down the road, really, from where I'm at. So, yeah, I love that. So, the other thing I wanted to ask you is, and this is more of a personal one, but what is the biggest mistake that you have made as a passive investor? Because you've been in 15 deals, there's got to be some mistake that you've made. Rushing before I knew. Running before I could walk. That was the biggest mistake. And I think, when you run, and it's in the deal that I'm, where I had to chase these leads, in one of my deals where I didn't do the vetting that I typically do because I was excited about getting into a deal. I wanted to go from, not 0 to 1, but I wanted to go from, 3 to 4, or, it was kind of in that stage. And I was like, yeah, let's just go. I went to a conference and I was so excited. I just wanted to get into a deal, and I jumped into this deal without doing the vetting that I typically do. Mm-hmm. I'm not losing my money. So that isn't, I'm not worried about that because the property is going to go up for sale, but the distributions haven't been as strong as they predicted. The occupancy hasn't been as high as they expected. So the financials aren't producing what they expected. But if I would have sat down and did my typical, vetting that I typically do, I may have skipped this investment. And because I was rushing, I didn't do the right thing. But then I want to say this for all the future passive investors. 0 to 1 is a big deal. But don't let 0 to 0 to 0 to 0 to 0 0 0 0 0 0 happen, because then you don't do anything because you're still strategizing and you're overanalyzing. At some point, you got to take a risk. And you want to do it wisely, but at some point you got to go from 0 to 1. And that's the key. And so I think there's a balance between doing your analysis and then execution or action. And you got to be at some point willing to pull the trigger. There's a few people that are in our ecosystem that when I see them, I'm like, are you in your first deal yet? Because there's 5 deals out there. I'm like, are you in a deal yet? And they're like, no. I'm like, don't talk to me till you get into a deal. Then come talk. I've talked to you already 3 times. You got all the data you're going to get into a deal. So, yeah. And so I'm just trying to help educate them, but help also push them a little further, but not forcing them to get into deals that they're not comfortable with. Because some people are going to always hold close to the vest, and that's okay. That's just who they are. Yeah. Ultimately, action is what separates successful people from, less successful people, really is what I should say. You got to be willing to take action, and that's what it comes down to 100%. So Louis, it is time for our nuggets of wealth. And so let's get these questions started. What is a good tool, source, or platform that you use almost daily that can also help others?
I've been using this throughout my entire career, so probably over 25 years. Quicken Home and Business. I use Quicken. Why do I do that? I use that tool because it tells me my net worth every day. It lets me know my capital position. It lets me know about all my investments, and that's whether it's on the real estate side or my stocks and my investments and all the other things that I have going on. I have one place I can go to on my system where I can keep all of my data and see it every day. Then I can make decisions about where I want to go. But that's my tool.
So it's called Quicken. What was the last? Was you said Quicken?
Quicken Home and Business.
Quicken Home and Business.
Yep, it's a financial tool. So if you want to know where you sit financially, and the reason that I did this was because I was making some good money, and I didn't know where my money was. And I literally had to figure out where I was spending my money. And then I learned why I had so many friends, because I was taking them out to eat every day. And so, I was spending, a couple of grand eating out every month. And I was like, this has to change. And Quicken was the device that
they got you on the right path.
Got me on the right path. Yeah.
Okay.
There's many tools out there that do this, but that's mine.
That's yours. Quicken Home and Business. Okay. What is the top advice or tip that you give to someone looking to focus primarily on being a passive investor?
Biggest thing I say is educate yourself. You, as a passive investor, have to have knowledge in the space that you are getting ready to passively invest. I don't care if it's in real estate, car wash, cleaners, whatever. You have to have knowledge in that space, and industry knowledge and market knowledge. You have to know what the demand is. If there's no demand and you got a cleaners, why would you open up a cleaners if there's no demand there? Whereas if I got a lot of people that's going to be wanting to live in this because the company's coming down here. Well, why don't I invest in that space? So just knowledge is key. You got to educate yourself. That's the key. Education is key for sure. What book are you currently reading? 0 to 1 by Peter Theil. It's an entrepreneurial book.
It just so happens we were just talking about that, right?
That's
0 to
exactly
1.
Right. 0 to 1. So I think that book's about entrepreneurial startups, but that's the book I'm reading now.
0 to 1. Gotcha. Where do you see yourself in the next 5 years?
In the next 5 years, there's a mentor that I have who's in probably about 50 deals. As a passive investor, he probably syndicates one. But I like to see myself with about 5 years. I'll grow up and be like you one day and syndicate a deal. But I'll be passively in about 10,000 seats. But my goal in about 2 to 3 years is to, ultimately get my own apartment complex, buy it on my own, or buy it with one other person. Mm-hmm. But still passively invest. I'm going to continue doing that. I also want to make sure that I'm helping many others get into this space, because a lot of people aren't educated and informed, or they're just scared about the real estate space. And I want to educate people about the real estate space, that if you educate yourself, you can do well in this space. And so I see myself pulling more people into the ecosystem and into the real estate ecosystem in about 5 years. I'd like to be mentor. I shouldn't say that. I will continue to be a mentor to people getting into the real estate space.
Yeah, you will be. You have done, and you'll continue to do that. No, there's no doubt in my mind. At the end of your life, how do you want to be remembered? Legacy. That's what you're talking about. I think my legacy will be about helping others create dreams. That's my dream. Helping others create dreams. I love seeing other people succeed. I've always been I call myself a producer or an executive producer. And I actually am launching a company where I do executive coaching, where I'm helping executives and people transition from point A to point B, whatever it's in. And so I do some coaching, and that's what I love doing. So helping others achieve. I'm living a great life. I've seen the world. I've traveled the world. I've lived all over. I've been blessed, and I'm also, giving back. I give a scholarship to my high school. I help kids out. I really make sure I go speak to kids, because I want to change the cycle for many kids that might be in inner cities or, underprivileged and don't know that you can achieve, you can make it. I think you have to give some time back and help kids that might not be as fortunate. I mean, I come from a tough area in New York City, in the Bronx. And I go back there every year and walk around the neighborhood and talk to the kids and make sure people see, yeah, I've done it. And if you want to do it, you can too, but you got to grind. It's a tough grind. But my legacy will be about helping others succeed. I love doing that. People say that, Louis, you give away too much. I'm like, yeah, it's all good though. That's who I am. I'm good. That makes me happy. And then if that makes me happy, I'm good. And guys, he's not just saying that. He really does mean that, because I personally know him, and he's what he says is true. So that's genuine for sure. So Louis, where can Commit to Wealth Nation go to contact you and find out more about what you're doing if they want to reach out to you?
I have a couple of emails, but people can reach me at loumaximus@gmail.com. That says loumaximus@gmail.com. Just give me an email, send me an email, let me know if I can help you. If you need something, you want to ask me a question, I'm an open book. Call me if I have time. I'll definitely hit you up. And then when you get my response back, I'll have my phone number on it, so then you can call me.
One step first, huh? The email first. Gotcha. So, Louis, man, it's been a real treat, a real pleasure to have you on. You have really, I love our conversation, man. It was just smooth. It was great. So, it was a real pleasure to have you on. I wish you continued success.
Thank you. And I wish you continued success, because what I think you're doing is amazing. And you're opening so many doors, and I don't think you know it. But keep doing what you're doing. You're being a great example for many of us that don't have the confidence. So keep doing what you're doing, Juan. And thank you for having me. And to all the passive investors out there, 0 to 1.
0 to 1. I love that. Thank you so much for the kind words, and I'll see you around for sure.
All right, buddy. Take care.
CommitToWealth.com, creating a legacy by committing to real estate wealth.